Welcome to the StockMentor.com studios here in the Black Hills, South Dakota. I'm your stock mentor, Brian Johnson. Alright guys, I was going to do a video this week, and then I kept thinking I'm going to wait for a day when something actually happens, and then I'll do an update video, because it's not much fun to have somebody do a video and then listen to them say there's nothing going on, thanks for watching. So I really did. I tried to be patient and wait for something to happen, and guess what? The videos basically, nothing happened. We had job numbers today. I expected something to maybe move, get some real movement today, and we did. We did as soon as job numbers were released. Everything ran to the upside. If you're a futures player, I was able to catch a few points to the upside there, make some money on that before the day started, which was nice. Pretty much set me up for the rest of the day. And I was done, but I was expecting a little more. I really thought maybe we'd continue to run to the upside, oh, hey, here it is. This is the next move up, and it just, it didn't take long, and it just completely ate everything away by the first hour or so of the open. The Nasdaq in particular just took a thumping today. Now, most of that was based on Apple, and that isn't what the rest of the market showed, but overall, by the end of the day, we had kind of a discordance in the markets where we had the Dow up and considerably. I mean, the Dow actually had a pretty good day. I shouldn't say considerably, but it had a good day, and the Nasdaq had a terrible day. And so, in most of that was, of course, on Apple's shoulders. And by the end of the week, we really didn't have much to talk about. It was really a pretty slow week overall. So I'm going to blow through the video. I'm going to kind of catch you up on what's going on, but I want to tell you guys, welcome to December. December works like this in most cases. You get maybe, historically, I usually see the first couple weeks of December give you some movement, something to trade. And then from that point on, it's pretty slow going. A lot of people don't want to make big moves in hedge funds and whatnot, investment funds, before the end of the year, and they're coming into the end of the year. And these guys have already made what is actually a pretty decent profit right now. Their sheets are going to show pretty well by the time the year is over. So when they send out all of their client sheets and whatnot, they'll have a pretty good return to put on there. So I wouldn't want to screw that up either. Anyway, as it is, we probably will get, I'd say, maybe another week worth of really decent movement, and then things might start to really slow down as if it hasn't already. But here we are. So we broke above some of these levels on the Dow. You can see the 13.1 area went 12.9, and 13.1 is really the areas I was watching carefully here. And no break to the downside, but we did get that break to the upside, as you can see, and that took us up and into some new highs. If we go ahead and flip to the daily, you'll see that we're back into the 50-day moving average. And guess what? So is everything else for the most part. Now, the Nasdaq is not, because it already visited its 50-day moving average, and it's pulled back from that. But most everything has been able to at least hit, if not stay at or around, its 50-day. The Dow has finally done that now as well. It's still, I'm not sure if it's going to be the leader here. I mean, I like the fact that it moved to new highs and that it got up and into some higher levels. But I'm not quite convinced yet, necessarily, that this is going to be what strikes it off for the other markets. I will be expecting that, and I will be looking for that early next week, only because historically we generally get a move up into Christmas, the Santa Claus rally that everybody talks about. And I would certainly expect that we're going to see the same thing this year. There's no reason at this point not to expect that. Yes, I know there's a fiscal cliff, but it doesn't appear that the markets have started moving according to that yet. I mean, every once in a while, Boehner steps forward and says, we're not making any progress, and the markets might drop temporarily, but they always recover. So, the fiscal cliff, I don't think, is a big deal at this point. I think the markets realize it's not a big deal if we don't get it done by the end of the year. That's more politics than anything. If you look into it, it's really more politics than anything. Everybody wants to point the finger at the other party, and so everybody's claiming that it has to be done, and if it doesn't get done, they have someone to blame type thing. But I don't think the markets are all that interested in it right now. Okay, so this is what we see. A move up into the 50-day moving average. I like that it broke into these new highs, and we'll see if the rest of the markets follow, because you'll notice that none of the rest of them did. The Dow has been the strongest for even the last 3 days. So for most of the week, the Dow at least has been the one that's kind of continued to move and move consistently. The point here is it's only back into its 50-day moving average along with everything else. Here's the NASDAQ, very well contained between this 26 and 27 area. Really, you put your lines at 26 and 27 and you've got it pretty well contained at that point. You can sneak in above or below some of these other areas if you'd like to into next week, looking for long and short opportunities. But look what we've seen in the NASDAQ. Choppy, straight sideways action, nothing to really go off of here. Today was a pretty decent move down, as you see, almost 0.5% down. But here's the bigger picture. Look, we're already into the 50-day moving average, and after we hit the 50-day moving average on the NASDAQ, it dropped and dropped hard for a couple of days. Now we're well contained below the 200-day moving average. So is it going to make new highs? I'm going to tell you something. If it does, you're going to want to watch this. If Apple makes a huge recovery, if it manages to find its feet into Christmas time, Apple's going to be a good trade, and the Nasdaq's going to be a good trade. And I love this 2700 area because it sets up a beautiful. It's almost too perfect. I'm a little bit skeptic of this now. It's almost too perfect. A beautiful inverse head and shoulders. It's gorgeous. Will I take it? Oh, yeah. I'm not going to miss it, but I'll tell you what. I'm going to manage it and manage it closely once I get in. I don't want to get burned on this where it kind of fake breaks you and then moves to the downside. But don't be afraid to take it. It's a great opportunity. It really is. It's setting up for a beautiful trade. So watching this very closely, this is what you're looking for coming into early next week, up and over these areas here, back below these areas here. It's like everything else. It's just moving sideways. You're just waiting for a break one way or the other. Just keep in mind, this one's got a little extra struggling to do. A, Apple's not moving very well, and B, you have the 200 and the 50 above you. So we've got things to work on here. We've definitely got some work to be done. Now, if you can't beat it, gap it. We'll see if, I don't know, for some weird reason we get a heavy day Sunday night. I don't know. I would expect us not to see a heavy gap up. If we do, maybe Tuesday, Wednesday time frame. I don't know about Monday, but that's a long ways to go to just simply gap these moving averages and gap 40 points. It's a long ways. But I would be watching anyway. I would be watching these overhead areas. I love to go long the Nasdaq. So if I get the opportunity, I'll definitely take that, and you should too. That's a good opportunity. Here's the Nasdaq on a weekly. This looks very similar to what Apple looks like. Go figure. I mean, the Nasdaq, and it's a Nasdaq stock, but we might be setting up what could be here a pretty large head and shoulders type pattern here on the Nasdaq. And if there's anything that the bears can hold on to, it's that, because it's a monster one. I mean, the target on this head and shoulders pattern would be like 1,000 points down. Okay, maybe not quite 1,000 points, more like 400 or 300 to 400 probably, but it'll feel like that much. It'll probably put you back in this area here. If we can get down below these lower areas here, you'd probably be looking at a target of somewhere down in here before it's all said and done. So, if they're going to do the Santa Claus rally, they need to look to get on it and get on it quickly. Very well contained from a weekly perspective, though, right between the 20 and the 50, and we're looking to see if we don't get that bounce off the 50 here. We've held it not once but twice now, and see if we can't get that extra push next week. That'll be what you're looking for. Keeping in mind that the Nasdaq did not do well this week. Down 37 points by the time it was all said and done. It's over 1%. Here's the SPX moving straight sideways. Still like pushes above here, pushes below here for your long and your short. This looks like everything else, setting up what could be an inverse head and shoulders like everything else. More noticeable on the daily. In and around the 1420, 1430 area ultimately is what I really like. And you'll notice, guess where it's at? Go figure, sitting right at the 50-day moving average. So this one is well stuck in this area. Looking for breaks up and over 1430, somewhere up in this area, not bad. Once again, a really nice potential inverse head and shoulders pattern here. And we'll see if we can't get some movement to that and prove that into the next week. If it does, guys, and it's legit, if these inverse head and shoulders are legit, these are trades that you'll be able to get into and stay with for not, just a couple hours at a time, but days at a time, and maybe even a couple weeks. In and through Christmas is the possibility here if this thing is really legit and we get a good hard push to the upside. It's absolutely what I'll be targeting. And when it does, and once this Christmas stuff slows down, you won't see 20, 30 points a day for 2 days or whatever. You're going to see 5 points, 3 points, down 2 points, up 3 points, up 1 point, down 2 points, up 5 points. Those will be the days. Those will be the types of days you're going to get into probably the middle of the month and the end of the year type stuff. That's typically what we see around this time. We'll see if that changes at all. VIX on a daily, I've talked about this 1,000 times, still very well contained between 15 and 20, and actually, more importantly, we're still pretty well contained on the lower side of that area. There is no fear in the market. Welcome to Christmas. Touch of the 50-day or 50-week moving average pushed us right back down on the VIX into that lower area again. 15 is pretty extreme, actually, in the bigger picture for the VIX. And right at the lower level of where it almost gets, almost starts to get a bit too extreme when we hit 14 and 13. But the point is, we're heading into Christmas, and there just doesn't seem to be a lot of fear in the markets right now. This is what I'm talking about with the fiscal cliff. Look, the markets aren't showing any fear. The fiscal cliff is coming, and yeah, you might get a little bit of this and up, down a little bit. But listen, let's look at this logically. The markets overall have been straight sideways. That's it, just straight sideways. The fiscal cliff isn't affecting them in any way, shape, or form. The reason the NASDAQ's been getting its butt kicked is not because of the fiscal cliff, it's because of Apple. Apple's getting destroyed. So it has nothing to do with that. The VIX, same thing. Listen, if there was fear coming into what are we to expect going forward in the markets, the VIX would be reflecting it. It's not. We're not only in the comfort zone, we're in the lower part of the comfort zone. It's just not a big deal right now, guys. So anyway, whatever you want to feel about the fiscal cliff is great, but I'm telling you, they're making mountains out of molehills here. So it's not a big deal. FAS on a 60-minute, not yet anyways. It might be into next year. Sorry, I should rephrase. It is a big deal. It's just not a big deal right now. FAS on a 60-minute, look guys, we're very well contained, hanging on this little channel line right here. What you're looking for next week is 112 long and then somewhere back into these lower areas here if you want to go short. But if this thing can press above 112, I really do think 114 to 115 is possible on that, and maybe even more is if we get the Christmas rally. You're going to see, of course, the financials go with it, and it could run itself up into above 115. And, if we can get a good break above 112 or 113, I'd dabble in it. Because if it continues to grind its way up, you could see a 120-ish or something out of this by the time it's all said and done. Here's what we got so far is a break of this lower channel line here and a hold, and it's broke to new highs today, and it's doing pretty well. But there's no reason to think we couldn't revisit the highs at 120 or maybe even exceed the highs by a little bit. I would probably put my upper range at somewhere between 117 and 123, something like that. But if you're in at 112 and you only play it to 116 or 117, that's still a killer trade. You've done really well. So anyway, this is something to be watching for sure coming into next week, giving you an opportunity to trade it. FAZ then doing kind of the opposite, where it's been running its way down. And I'm going to like it here, looking at it daily. Maybe we broke a head and shoulders pattern here. I'm going to show it's a little bit more clear, I think. The head and shoulders seems to be easier for people to spot than an inverse head and shoulders. So you have that inverse on the FAS, you have the head and shoulders on the FAZ, and you can see it looks like we put one in, little right shoulder right here, break it, hold it, and push to the downside. If that's the case, there is a bull rally coming. I'm not going to commit to, I'm absolutely bullish, but I'm going to tell you that historically we are bullish coming into Christmas, and that's where my bias is going to be. I'm going to be neutral to more bullish coming into next week and into the end of the year, to be quite honest. If we get heavy pushes to the downside and the VIX starts to spike, I'll change my tune. I'm okay with that. I don't have to be a perma bull. I don't have to be a perma bear. I can roll. That's what we do as traders. I don't care whether the market goes up or down as long as it moves. That's all I want to see as a trader. Okay. So if we can get back above, let's say 18 or 19, 18, actually about right around that 1850-ish mark you see up there. If we can get back above this 1850-ish mark, okay, now listen, something might be a little bit, there might be a little bit more going on to the bear side than what we knew before. And we should use some caution at that point. But really, until then, I'm going to stick with what I know, and that's the bears or the bulls are typically bullish in this time of year. Go back, look at last year, and I might have mentioned this in the last video. I don't remember. I barely remember what I did yesterday, let alone last week. But I might have mentioned this. Keep in mind that you go back and look. We started a big push up towards the end of November into early December last year. And we didn't actually stop. with the grind to the upside until what, late March, early April? It was ridiculous how long this thing went into the grind. But it started in December. So I'm telling you that if we can get in on a good bull push to the upside, guess what? You could be able to sit in it for not just a couple of hours, couple of days, couple of weeks, but maybe, I don't know, a couple of months. I wouldn't commit to that at this point in time, but you never know. We could see that thing run up through January and into February. So there you have it. That's what I'm looking at. That's kind of where I'm at coming into December. So it catches you up on a Friday, gives you time to look at it over the weekend, maybe make some moves on Monday. If you enjoy this kind of content, you'll love the subscribers newsletter. It's $28 a month. It's about a buck a day. Um, Super cheap for the information you get. It's a video like this, like what you're seeing here, every day except for Saturday. So 6 videos a week, going over that market day's action. And you can sign up using PayPal. If you don't want to use PayPal, write me, and you can send me a personal check. You can send me a cashier's check. You can pay by credit card over the phone. You don't have to use PayPal. I'm very flexible when it comes to that. If you try out the newsletter for a week and you're like, nah, I don't know, I don't understand it, or it's not really for me, let me know, and I'll refund your money and cancel your subscription. I'm okay with that. I have no problem with that. I'll give you a free trial and let you guys check it out and see what you think. But for $28 a month, it really is. Of course, I'm biased, but I really do feel it's a strong value, and I feel that my subscribers think it's a strong value as well. I don't have very little turnover, so I must be doing something right in that respect. The next step is the mentoring. If you really want to do this full time and you want that one-on-one time with somebody, you don't want to sit and look at videos, or you don't want to sit and have somebody send you DVDs that you can't ask questions to, talk to me about the mentoring. The mentoring's a different beast than the subscribers newsletter, but talk to me about it. I'll send you information on it. We'll see if it's a good fit for you, but it's one-on-one mentoring with me, you and I, always live, no videos to watch. It's you and me, always live, one-on-one, talking over the phone, and I've got a whole slew of information I go through. It's a college course. I will say it's a college course, trading, and bring your pencil and paper because you're going to take a billion notes. And it's a good way to really teach you what you need to know to become more consistently profitable in the markets. And who doesn't love that? So it's because it's an education that pays you back. It's a wonderful investment. It's not like buying a car where it depreciates over time and maybe you'll get back out of it what you put into it. Most people never will. This is an opportunity to get an education that will help you make money in the markets, and that in turn pays not only for itself, but then pays for more than that down the road. So it's a good opportunity to at least inquire about it and see if it's a good fit for you. All right, guys, I'll let you go, and we'll see you next week. Bye.